Good morning. After all is said and done, after your business grows, and we use all those nice strategies, then I'm at the top, waiting for 30% shareholding in your business. So I'm happy to be here this morning. I am not a sister from KRA. I'm a sister from CITAM. Hallelujah. Because I fellowship in this church, and I'm happy to be given this opportunity. I'm not here as KRA. I'm here as Esther, trying to help you as businesses to see how after you do very well, you can please pay 30%. It's biblical. I want someone to read for us Romans chapter 13 as I begin. From verse 1. And I don't know how much time you're giving me. I can talk the whole day. The tax system is very wide. Romans chapter 13 verse 1. That's it.
Romans 13 verse 1. Everyone must submit to governing authorities, for authority comes from God, and those in positions of authority have been placed there by God.
Just go on.
Okay, so anyone who rebels against
Till verse
authority
6.
is rebelling against what God has instituted, and they will be punished. For the authorities do not strike fear in people who are doing right. Allah. But those who Allah is not in the Bible. But in those who are doing wrong, would you like to live without fear of the authorities? Do what is right, and they will honor you. The authorities are God's servants sent for your good. But if you're doing wrong, of course you shall be afraid, for they have the power to punish you. They are God's servants sent for the very purpose of punishing those who do what is wrong. So you must submit to them, not only to avoid punishment, but also to keep a clear conscience. Pay your taxes too, for these same reasons. For government workers need to be paid. They are serving God in what they do.
Can I close it there?
Danny, that hits different.
Can I close it there? You want another version? You feel that one is not correct. Now, if you're not doing the right thing, you have a reason to do what? And that is why I'm here. Because I don't want people in church to be afraid of the authority. If you do the right thing, you have no reason to fear the revenue authority. Let me tell you. You are armed with the tools to deal with the revenue authority if you're doing the right thing. Now, you have to pay taxes, my friends. There's no way around it. And I think it is in the Bible. Taxes have to be. Please, believers, do not pray away your taxes. It is in the Bible. It is biblical. We give to Caesar what belongs to Caesar. So that's the beginning point. So please don't pray and fast for your taxes to go away. You are praying against the Bible. The people who serve need to be paid. Now, what is the problem with our taxes? Because all of us are paid. By the way, I'm a taxpayer myself, as much as I'm in KRA. So when you hear these ridiculous rates being pronounced, they affect Esther and everyone in KRA the same way they affect us. So when you're crying in your bedroom of the rate of tax moving up to whatever percentage, I'm doing the same, but I have to collect it. I have to. So let's start by believing and accepting and changing our mentality that taxes are biblical and we have to pay them. But what do we need to do as the church? As the church, we need to pray for the people in authority to stop misusing our taxes. So number one, don't pray away the taxes, but pray for the people who God has given an honorable responsibility to manage your 30%, to manage it effectively, because that is where we have the problem. And I'll tell you, believers, as KRA, please do not shoot us because we do not have the mandate to manage your taxes. Even me in my office, sometimes I don't have water to drink as much as I'm collecting. Why? There's a different body that manages the taxes. And church, let us not operate in ignorance. When I hear people blaming KRA of misuse of money, I wonder, where did you go to school? My work is to collect. And let me tell you something. I also collect what has been registered by the people you have voted in power. So if you want to shoot people for taxes going up, our speaker, go to your MP, not KRA. Because the moment your MP sign that legislation, whether the tax is affecting KRA or not, I have to collect it. Whether Esther has to pay or not, I have to stand here and pretend that I am happy to increase taxes to 35. It's not me. So as church, let's also not operate in ignorance. As you go to your fasting to pray, I want you to pray the right thing. Don't pray for KRA to stop increasing taxes. Please. Pray for your MPs who is legislating for taxes to be increased, not KRA. So can we be very clear? So that you stop shooting me when you see me seated somewhere there. I like sitting somewhere there. So going forward, Pastor, I don't want to be shot by people here. Let us please understand where responsibility is. Responsibility to legislate, to increase taxes, to approve increase. I can propose, by the way. Sometimes we propose. Because when the government pushes us to collect 3 trillion, my friend, we only collected 2 point something last year, and you want us to increase by 45%, 50%. Where am I going to get the money? I don't have a bank at Times Tower to go and pick. So what will we do? We will propose for. But why is the government increasing it to 3 trillion? That is where your prayers should go. Can we pray for the people who are given the responsibility to manage your resources, to manage them effectively, so that we stop seeing these ridiculous increases in tax rates? Because even us, as people who collect, we know, we feel the businesses. If you go to an honest person, they will tell you in KRA, we don't laugh, we don't smile. It's not a happy business. It's actually the hardest because I'm also collecting from myself. Who wants to do that? Having said that, so we are clear on where we are going to direct our prayers. So I don't want curses for KRA, okay? Let's pray the right prayers. Businesses. Doing the right thing is very important, and I cannot overemphasize that fact. I'm sure all of us here who have started businesses, you don't want it to remain a 500,000 business forever, do you? Why are we here? We want what level of businesses? We want to manage the Kenyan economy, a business that is equivalent to the Kenyan economy, right? You want to manage a big business. So why do you start the wrong way? Is it that you don't have faith you're going to increase or grow your business? David, why do you not have proper books of accounts in Davasha? If your dream is to grow your business to a billion business, why? Why can't you pay someone 10,000 shillings to prepare your accounts at the end of the year and to keep your invoices and to keep all the necessary records? Because we may not catch you when you're doing 500K. But we will catch you when you start doing 1 million, 2 million, 3 million. Now, unfortunately, when we catch you, we go backwards. So business people, even if I don't teach you tax today, basic principles. Please do not save 20,000 to pay an accountant to keep your books of accounts. That is AMA number. You are given the tools to grow your business. Me, I'm giving you the ammunition to deal with us. Okay? To deal with who? KRA. The moment I come to your business, however well you're doing, and you don't have records, please, when we see us killing businesses, we don't. You died when you started. Please don't blame KRA for killing your business. You died when you started. Why did you die when you started? Because you decided to operate your business without proper records. My friends, please, documents, documents, documents. You cannot survive a KRA audit without records. Please take that to the bank. The moment I come, you don't have records, I will use my judgment, and the law allows me to estimate. It is up to you to tell me the estimate is wrong, and you cannot just tell me evidence. Okay? So let us be very clear, my good friends in church. Again, don't pray away your bookkeeping. As our first speaker said, some things you don't speak in tongues about. Please, let's have an honest conversation. Some things you do and you have to do and you have no option but doing them. Keep your records. The moment you do that and you pay your taxes based on your records, the Bible says, please, do not fear us. And even if we come there coughing fire, please, tell the officer, please sit down. Let me give you a cup of tea to relax. Here are the books. And this is how I've paid my taxes. Now, do you think I'm wrong or right? Okay, if I am wrong, let's meet in court. Simple and clear. But you can't go to court if you know what you're doing is wrong. Now, why do we bribe KRA officers? Why? Who has given a bribe to KRA? I know you won't raise your hand because the pastor is here, but maybe if we met somewhere, you would have. Why do we bribe KRA officers? It's because we are unable to support our transactions. And we have been doing the wrong thing. So my friends, that sermon can end there. But my encouragement, even if you need help from Esther in KRA, my encouragement, I can't help you if you have not helped yourself. And I don't want anyone here to come to me to help them if they have not helped themselves. Keep your records. Now, you can go home with that from a tax angle. When I was approached by Mr. Monyere here to talk about tax, I wondered really what I'll talk about because tax is very wide. And probably this is session 1 of 20 that we need to do. Because I can only go through the basics because I don't know how many of us here know even what tax is. I know as businesses, you point at it from there. We have to pay our taxes. Which ones? Which taxes? Do we understand which taxes we have to pay? And for you to also be armed with the KRA, the second thing is that you have to understand the law. Either understand the law or get someone who understands it. Don't come to KRA ignorant because we see the ignorance from your eyes. And when an officer who does not have integrity sees ignorance in your eyes, then you're going to pay. They are going to make your tax debt 20 times more because they can see ignorance. And if they don't have integrity, they'll make it 20 times more so that you pay 10% and pay KRA 10%. So KRA has already gotten their 10% that was needed. But what did you pay? 20 times because of your ignorance. So you also need to appreciate and understand taxes. Now, tax can be complex. which is why we have tax consultants. Engage a cheap one. There are cheap ones and there are expensive ones. But when you engage a cheap ones, please also try and understand taxes. Because the cheap ones can also cheat you in the process. Okay? They are good cheap ones, but also evaluate and make sure you have the right person. Now, who can tell me how many types of taxes we have? Sorry, David. And Asha, I seem to know you more. Give me one type of tax that your business is paying. VAT, value added tax. Asha, I know you're the management in your business. David is the shareholder. Pay as you earn. Anyone else? Pastor Duku, I know you probably don't pay tax as a church, but what taxes do you understand? You only get a few opportunities to ask your pastor questions. Income tax. Let's clap for our pastor. He's done well. Now, the Kenyan administration of taxes is in two broad categories. One is customs, and two is domestic taxes. Broad categories. For purposes of today, I will try and look into the domestic taxes, because that is what would affect you more. People who import goods would pay customs taxes. So whenever you're importing goods into the country, you pay customs taxes. So in KRA, we are actually broadly divided into two: customs and domestic taxes. So customs are the people you'll find at the border, at the airport, everywhere, so that you don't bring things into the country which you have not paid taxes for. Why do we impose custom duties? The very simple reason is that we want to maintain competitive advantage for the people who manufacture those goods locally. That's the one most important point that we miss. So if you have a company manufacturing or assembling vehicles in Kenya, you want to impose as much duty to the person importing, so that then people can go and buy the locally assembled. So that's customs. And it's very broad. I can't cover it here. I don't deal with customs. I deal with domestic taxes. So I had a policy division in KRA that deals with policy issues, and more importantly, advising taxpayers on tax payments. Now, some of us sit here and think you can't approach KRA for advice. I had that division that advised taxpayers. You just need to write to the head of policy in domestic taxes and tell them I have this transaction and I would want you to interpret it for me on what taxes are payable. That's what we do on a daily basis. Now, before you write, of course, you have to be clear that you've done things the right way and you're asking it for the right reasons. Because then before I tell you what to do, I need to investigate what you've been doing. And if I advise you this is the way to go, then we look back and ask ourselves, have you been doing that in the past? Then I tell my people, please look into this one. We will come to forgiveness. Even KRA forgive, but it has to be within the law. So domestic taxes are then divided into direct and indirect taxes. So domestic taxes are then split, direct, indirect. What is direct? Direct is what you pay on your income. Whether you have a company, whether you have a sole proprietorship, whether you have a partnership, if you're on your own, you're employed, you're earning income. So we get income tax from it. As simple as that. As we take 30% of your profits. Not necessarily, I'll go into the details. Indirect taxes is what you're charged when you buy goods or services. So you go to Quickmart, you do a shopping of 20,000, and we add you how much? 16%. That is the indirect taxes. So that one is based on your consumption, what you consume. So the bigger the consumption, the higher their taxes are. Now, broadly, therefore, when you are looking at taxation, then you have to look at both direct and indirect taxes. I'll give just the basic principles here. Then if you want to enter into taxation 102, we can delve into the details. 30 minutes won't allow me to, and keep monitoring my time, because I can talk and forget that I only was given 30 minutes. So the indirect taxes is VAT and what we call excise duty. Excise duty, initially when it was introduced, it was a sin tax. It was supposed to counter certain behaviors like smoking or alcohol abuse. That was the initial reason why excise was introduced. So that instead of the price of beer being 10, we put 60% on it, so that it becomes 160 or something. So if it's 100, you add 60%, what does it become? So we make it as expensive as possible, so that then we protect our people from drinking more. Sinning, yes, sinning, pastor sinning. That was the original intention of excise duty. Over time, it has become a revenue measure as well. Quite unfortunate, but it is what it is. So you find excise on your airtime. What sin have you committed in buying airtime? Excise on your water, excise on your juice. Juice you can justify. We don't want you to take a lot of sugar. Good people, especially when we are aging like this, we need to put more to sugar, which is why if anyone has read the finance bill, you've seen we are introducing excise on sugar. And cement. There's a lot of dust. We want to avoid a lot of dust. Anyway, so excise was initially supposed to deal with sin. And if there's a way we can be able to go back to that, it will help us. So that then but your MPs and your government need money, unfortunately. So that's why so many of these things. Why excise? It's because it's very easy to collect. Why excise and VAT? Why do we keep having a lot of debate on excise and VAT? Because it is businesses like you that have to collect it for us. We give the burden to the supplier of the product that is excisable or vatable to collect that tax for us. And by the way, we don't pay you anything for doing that work. But if you don't collect, we come and collect it as though it was due from you. Which is why you've had us closing very many beer manufacturers. Why? And I'm here to also have a very open conversation with you. Why do we close them? You sold alcohol. You didn't charge excise duty. Now excise duty is almost equivalent to the price of your product. Most of the time. You sell, your cost of produce is 100. That is your actual cost to the customer. But we put another 100, which is excise duty. Now, tell me, good people, if you don't charge it, if you sell your beer at 100, and we want to collect excise duty of 100 from you, what do? You close down. We basically collect the entire of your turnover, isn't it? Which is why people here need to be very knowledgeable about taxes, because as Esther would feel very bad that a company whose owner is a CITAM member has been closed. Why? They didn't collect VAT. What can I do about it? I can only pray for you to get money to pay us, because there's nothing else I can do. So it is very, very important for what we are calling indirect taxes, VAT and excise. Please, if you live here with nothing else, businesses, that is not your tax. It is not your tax. It is the tax for your consumers. Please put strategies in place, put mechanisms in place to make sure that you collect that tax from your consumers, because no business is expected and is supposed to suffer for VAT or excise duty, because those are taxes you're supposed to charge. Now, the way VAT mechanism works is that you will be charged VAT by your vendors. Okay? You will be charged VAT by your vendors. Then you are supposed to charge VAT to your customers. Take what you charge to your customers, remove what you are charged by your vendors, and pay us the difference. Simple. Now, what have many businesses been doing? You are charged by your vendors. You don't charge your customers. So we come 3 years down the line. The law is very clear. You can only claim from us what you are charged by your vendors within 6 months. Now, Davasha was invoiced by their vendors. And allow me to use Davasha, it's the only business I know here. Davasha was invoiced by their vendors, and they were charged VAT of 200. Okay? They refused to charge Esther when she went to take photos. They did what? They refused, or they were ignorant. Let's even say they were ignorant. But when it comes to tax, ignorance is no defense. They refused to charge. So they invoiced Esther without VAT. If I happen to come after 6 months from they received this amount and tell them, Davasha, you didn't charge VAT of 16, I will tell them, pay me the 16. Because the 100 that you were charged is time barred. You can no longer claim it from me as KRA. And that's the mistake most of the businesses do. So if you don't appreciate how the law operates, which is why I'm saying ignorance is what is killing most of the businesses. And by the way, we offer a lot of training free of charge in KRA. And when I find an opportunity like this one, I'm happy to sit you down and tell you, my friend, I can't help you if you did things in ignorance. We can only pray to God to give you money to pay, but then we clean up and are unable to move forward. So indirect taxes, my good friends, are not taxes that you should bear a burden on. Understand it, that if you are charged VAT by your supplier, please charge it to your, declare what you are charged by your supplier in your return. Then charge what you've charged to your customer. And the net difference is all we need. We don't want more. Are we clear on VAT? I cannot go into the nitty-gritties of how it operates, but that's the basic concept. Now, when I go and buy things at QuickMart, I am the final consumer, which is why that burden is on me, because it's an indirect tax. I cannot claim that VAT from anyone. That is my tax. That is how it's supposed to work. Get an input, we call it input, from your vendors, declare an output, and remember, you have to declare this input within 6 months in your return, because most of us forget that. You come after 6 months, you can't claim it. So we demand VAT on your entire output. So what happens to your input? It becomes a cost to the business. And that's how most businesses are saying taxes are high. They are killing us. But you killed yourself because of ignorance. Sorry. We will write that down. I hope he will give me time to respond to questions. So for VAT, every 20th of the month, you are supposed to file your VAT return, declaring what you are charged by your vendors and declaring what you have charged your customers. Then pay the difference. By the way, the difference is only 16% of your profit. The profit that you made from that transaction. Most of the times, if you do things right, the net difference that you'll pay to us will be the 16 on your margin, because you already claimed on your cost, okay? So you're just charging your customer to be able to offset what you are charged on your cost, then you pay us on the profit. Who is supposed to register for VAT? As long as you're making more than 5 million in a year. What does that translate to in a month? 400? 400 thereabout. So as long as your sales are above 400,000, please just register for VAT. Because if you don't, and we come and catch up with you, we will go back up to 5 years. Register you backwards and demand that VAT from you, as though it was due from you. And the disadvantage is that the input you are tax becomes your cost. What does that happen to your business? You close it. Because if your margin is only 2%, and I'm demanding 16% from your entire sales, and I'm not allowing you the cost, do you now understand why businesses are dying? So as Christians who are here, please, it's only good for you to appreciate how the VAT system works. I know most of us may not be dealing with excise duty unless we are manufacturers of the product I have said, but VAT is a killer. It's killing businesses, and we collect it without mercy. You know why? It is an obligation you are given to charge. It was not your tax. So we collect it without mercy. You didn't charge it. Why? And you didn't tell us you had a problem charging it. Would have helped. Okay, so if your turnover is above 5 million in any particular year of income, please register for VAT. Because of the loss of revenue we have experienced in the VAT field, we have decided automation is the way to go. And we are not making any apologies for the automation. That's why you're hearing e-teams, teams, electronic devices. Why? Let me educate you believers, because you probably have been blaming us for wanting to automate and giving you the cost for automation. But you've now come up with something free that you can take up without any cost. We experience taxpayers. I explained to you how input-output VAT works, didn't I? So, assuming you have incurred input VAT of 1 million in a month, but for some reason you didn't manage to make any sales, what becomes of this input? It is a debt KRA owes you. KRA needs to give you back that money. Okay? So it's a debt. We recognize it as a debt from our side because the business was charged VAT. They were not able to make sales to be able to recover that VAT. Therefore, it's a debt. Now, in certain cases, that debt can be refunded to the business. But we only refund it on very few circumstances. That is, if you are an exporter. If you are an exporter, exported goods are charged at 0 rate. 0. Meaning that the entire input that you incurred is offsettable against 0. So you come to us and tell me, refund me. But if you are selling goods that are supposed to be taxable, then you cannot come and tell me to refund you because you expected to be selling products that have VAT. So what happened? Why are you in a refund position? We allow you to carry that credit forward as long as until you start a business. Because if you bought products that were vatable, we expect you to sell those products with VAT, meaning the input you've incurred can be collected against what you sell. Now, what we experienced is that taxpayers would go and buy invoices, not goods. They would buy invoices. So we have vendors of invoices, and I'm not trying to educate you to start that business. We have vendors who sell invoices. They don't sell goods, they sell invoices. So you find Davasha has valid invoices, all of them. They are fiscalized. If you know what is fiscalization, they are through an ETR device. He has 1 million input VAT. So he's perpetually claiming he's never going to pay us. Why? Because he never bought goods. What did he buy? Invoices. So he comes to KRA and claims a refund. But because we were never used to be very keen, we refund. Did he buy any goods? Do we expect any output VAT from those goods? So we ended up with claims, I can tell you, my friends, huge claims. Huge. People are claiming in billions, refund from KRA. And if you find an officer who has no integrity, they approve the refund and we pay. We pay out of whose money? What has been collected from other people, not from this person. So we were cheated in billions. We called it missing trader. If you have heard anything like that, it's the missing trader scheme. So there's input and no goods whatsoever. So that's why we started thinking of a technology that will then help us to be able to nab that. So when this person sells you an invoice, remember the way VAT works is that if Mr. Munyere you sell, you declare that output in your return, meaning you pay KRA, right? If the Davasha claims, you should have declared it. So the Revenue Authority has not gone short. What we ultimately collect and keep as revenue is what is charged to ESTHER as a consumer. Because Munyere charged Davasha, you declared the output, Davasha picks that input, puts in their returns as a debt from KRA, he charges ESTHER. So for Davasha, the output and input is fully offset. It's only what is charged to ESTHER that then becomes payable to KRA. Now, if you don't declare what you charged, Mr. Munyere, and put it in use in your business, but Davasha claims, what happens to KRA or to the government? You've gone short. So the strategy and the technology we've come up with is to make sure before David Davasha claims, you have declared. So the technology is supposed to make sure that you don't even need to file your returns. The commissioner can see Mr. Munyere's business declared X to Davasha. Davasha has claimed X. That is what technology is helping us do. And it is very important because then we used to lose what Munyere would. So VAT is as simple as that. Please, because you're here and you're business people, don't allow yourself to incur the cost of VAT. I won't go into excise because I have very limited time. Now, income tax. Income tax is paid by everyone. Note, everyone who derives or accrues income from Kenya. Simple. Whether you're in Kenya or not in Kenya, you have accrued or derived income from Kenya. Then the question is, for someone who is living in the US and has accrued interest income from Kenya, how do we tax them? Because they're not in Kenya. Withholding tax. So income is taxed in a few formats, which I'll just say in brief. So one of them is what we call withholding taxes. Withholding taxes is a tax that is paid by the payer of a service. This is also very important for you, business people. Because this one has no threshold, like VAT that you have to register when you are 5 million. If you offer professional services to Davasha, as long as that amount is above 24,000, he's supposed to deduct 5% before he pays you. That 5% is registered with us. Now, you may think 5% is little, but if you're making a profit of 5%, which is why some professionals have been complaining, because my tax is withheld at 5% of gross, but my profitability is very small. So I end up with a lot of withholding taxes, but when I come to do my income expenditure account and I do 30%, the 5% was higher than what was deducted. So you end up with a credit. So withholding taxes is a tax that as a business, if you pay any professional, and there are certain items that are specifically listed, management, royalties, interest, rent, commission and agency fees, sales, promotion and marketing. So if you pay anyone from your business for those services, please deduct tax. So 5% is mainly the applicable rate if you're paying to any company in Kenya. But if you're paying to someone who is overseas, then there are certain rates that are applicable. Most of the times it's 20%, in most cases. But there are certain countries that have what we call a double tax treaty with Kenya. Good example is the UK. UK has negotiated a double tax agreement with Kenya. What does a double tax agreement do? The government say, let us share the taxation rights of this income. Don't take 20%. If you take 20%, this person in the other country will end up with credits because their profit is not that much. So you then negotiate a lower rate of withholding tax. So before you pay a non-resident, then you need to determine which country are they hosted. Does Kenya have a double tax agreement with that country? What does that double tax agreement provide? And what are the rates? Which is where professionals come in. Don't kill yourself with some of those complicated things. Get a professional. Sometimes they can be complex. Okay? So withholding tax is as simple as that. Now, if you don't deduct that 5%, Davasha paid Munyere's company, he didn't deduct 5%. My friend, I don't care whether Mr. Munyere declared and paid everything. I'll go to Davasha. You are supposed to deduct 5%. Please give me the 5%. He cannot come and say, but Mr. Munyere declared and paid 30% without claiming the 5%. No. Please pay me first, because I gave you the responsibility to collect. So these agency taxes are important for you to understand, because the law allows us to demand it from the person we gave the obligation to deduct as though it was their tax. Now, in normal circumstances, if Davasha deducts 5%, and you do your computation and discover out of your professional services you are supposed to pay 20%, you're supposed to take 20 less 5 and pay us 15. That's how withholding tax works for residents. So again, for you as a business, it's not supposed to be a cost to you, the 5%. But what have we seen most businesses doing? Davasha deducts 5%. He does not even pay it to KRA. He keeps it. What happens to you? He deducted it, but he kept it. So businesses make mistakes of not going back to the person who withheld to tell them, pay it through the KRA system so that I can be able to claim it against my tax because you've deducted it from me. But you find most of us are also very ignorant. So you end up paying, yet Davasha is benefiting. If he doesn't pay that 5% to KRA, please go and demand it from him as a debt from you. Because it was your money. So that's withholding tax. Now, how many minutes do I have? 5 minutes. Okay, I'll try and finish within 5. Individual taxes. So that's withholding tax. Individual taxes. Individual taxes are taxed in 2 ways. One, if you're employed, your employer deducts what we call pay as you earn. That one, even Esther or anyone else, you have to pay. Because I don't get the money. I don't get to choose whether I want to pay or not. Actually, if my employer does not pay, KRA cannot come after me. It is the employer. So businesses here, if you don't pay as you earn for your employees who have hit the threshold for taxation, we cannot follow your employees, even if you take us to court. We will liquidate your assets. In fact, that one, if you go to the Insolvency Act, it ranks as priority 3 in insolvency. The moment you've paid your insolvency costs, you pay your employees, their salaries, we come next. Because it is money you have collected from Esther. It is her employment income. You collected 30% or whatever rate. You didn't remit. And that one, the penalties are also very punitive. To make sure you don't deduct from your employees money and fail to remit. So deduct. The pay brackets are the individual tax rates for pay as you earn are spread. And this pay as you earn, I want us to understand it, is what the employer deducts. So if you earn 24,000, you're deducted 10%. But what the government has done is that anyone earning below 24,000 then doesn't pay that tax. So we have what we call a personal relief of 2,400. Okay? So as long as your income is 24,000 per month or 288,000 per year, then the 10%, the government gives a pay relief. So you still need to declare that you paid that person in your return 24,000. You charge them 10%, but they got a relief of, so that they can be able to file their return at the end of the year. Now, you can go to our website, you can go to any website, you'll be able to get these brackets. I don't want to spend a lot of time with that. So this is where, because of the ease with which we are able to collect this tax, it then becomes a very easy route to up our taxes, which is why there is a proposed 35% rate in the current bill. Okay? So we start with 288 at 10%, we move to the next 35%. Currently, the last bracket is taxed at 30%. But now we want to introduce, if you earn more than 500,000, you pay tax at 35%. Because this one, Esther is not given any options. I have no options, 0. It's deducted, and if you don't deduct, I come for it. So this is where you can go to your MPs and tell them, my friend, save me from this one. It's aimed at increasing revenue. We are in so much debt, my friends. We need to pay our debts. Whether taxation is the right route is a conversation for another day. But that is what has been proposed. So, apart from pay as you are now, as you as businesses deducting it, there are some of you here who have registered their businesses as sole proprietors. Meaning, your PIN does not start with P. It starts with A. How many of us here? You consolidate your income with your normal. Davasha, I know you. So you operate with an APIN. So if you have registered your business as a sole proprietor, meaning that it's the individual who is trading, then these rates are also applicable to that income. So when you declare that income, then you also batch it in the same manner. If you have a company that you have registered, it has a PIN, P, starts with P, then your general rate is 30%. Flat on your profit. I hope we are clear. So if you have a sole proprietor, you declare it, we tax it 10, 25, 30, and we give you the reliefs that are required, and we move on. So that's how we tax income on individuals, either through pay as you earn or through just your self-declaration and you pay using those rates. For companies, you have to prepare a set of accounts, you compute your profit at the end of the year, then we tax you at 30% of those profits. For companies, it's straightforward. Only to the extent that we only do 30%. But the mistakes that businesses make is that you don't keep records of your expenses, my friends. You don't. You don't. So we come to audit you, you are telling me I estimated my cost to be 30%. Who are you telling that? It is not acceptable. Some of us are paying taxes almost on entire of their income. Why? You did not keep. How can you be operating a business you have costs and you don't have evidence of the costs? It is not the intention of the government to tax businesses on their income, the turnover. It is our intention to tax you on your profits. Please let us understand that. Bottom line, we want to tax you on your profits. So please keep a proper record of your incomes, your invoices out, and expenses, your costs. If we come and you have that and you've declared your net profit, we don't fight. You don't fear us. We'll be friends. I hope we are clear. Some of us incur capital expenditure like computers, you've bought furniture. The government allows you to claim a certain percentage of that as capital allowance. So again, if you don't keep records of those assets, you end up losing. There are businesses who pay very little because they are able to keep a record of their expenses and keep a record of their income. So for income tax, we have no option. Now, income tax is paid in 4 installments. Again, we've caught very many businesses on this. As long as your tax exceeds 40,000 in a given year, then you cannot wait until the end of the year to pay us that tax. We need you to pay it in 4 installments, equal installments, on the 4th, 6th, 9th, and 12th month. And this is information that is also available in our KRA's website. So how do you determine the 4 installments? Because remember, you're paying that tax in advance before preparing your end of year accounts. How do you do it? So if you're a good record keeper, you can at every quarter determine how much is payable by doing your accounts and saying, if I divide this is my expected profitability. If I have these costs, I divide it by 4, this is what I should pay. But the law has allowed you to use the preceding year to estimate your following year's taxable income. So you go to what you filed in the last year. If you filed a profit of 100, the law assumes you will make a growth of 10%. So increase it by 10%, then pay us in 4 installments. If you do that, even if at the end of the year you made 2 million, but your previous year you had only made 100, we cannot touch you because the law allowed you to pay in installment based on the preceding year. However, at the end of the year, If you had only estimated to make a profit of 200K, and you made a profit of 1 million, by 30th of April of the following year, please pay us the balance. Are we clear? Pay us there. So compute what should have been your taxable income, deduct what you paid us in installment, and pay us the balance. It's as simple as that. If you pay us we have given you 4 months to prepare your accounts, finalize your taxes, and pay us at the end of the 4th month. At the end of the 6th month, please file your return. Only then can we be able to confirm that what you declared is the right thing. Now, one mistake I have seen taxpayers make, those who are in business. You declare a turnover of 1 million or say 5 million for your income tax. You're very proud because you want to attract who? Investors. You're doing very well. You declare you made a turnover of 5 million, but you also made a cost of 4.5. So you're only paying tax on 500. And you're happy. You've cheated us. We come to your VAT and discover you only paid VAT on 2 million. But in your self-assessment, you have declared what? In your income tax. You automatically get assessed for the balance to remit VAT on it. So remember, your VAT turnover has to be the same turnover that you declare in your self-assessment, income tax, return. And most of you guys are getting it wrong. And the moment you do that, even if you had reasons, where your turnover in the VAT is not the same as income tax, that triggers an audit automatically. And let me give you these tips. The moment you file income in your income tax, and you filed nothing in your VAT, we will come. You may not see us the following day, but we are coming. Because we can see some under declaration. So make sure, on one hand and on the other hand, it is balanced. Are we together, my friends? Write that question down. So, what I'm trying to advise you is that records, you have no option but to maintain. Because the same records you'll need for VAT are the same records we are going to need for income tax. And you cannot cheat us on one side and cheat us on the other side. The moment you issue your invoices through ETR, we can see them from KRA. Then you come and file a 0 return for income tax. It doesn't pass. We will come after you. Are we clear? So I think those are the basic principles of taxation. And it's because I don't have a lot of time to go through it. There's a lot we would have discussed. And I know my time is up. So for income tax, the resident companies pay at 30%. That I have said. There are companies who are non-resident, but they have a branch in Kenya. So you find a US company has established a branch in Kenya, is not a subsidiary. We tax them at a much higher rate of 37.5. Then we have the SEZ. If you're in an SEZ zone, then you have a bit of tax holidays. 10%. EPZ, you're given a holiday for the first 10 years. Okay? But this one goes through very rigorous procedures for you to be licensed to operate in an SEZ or EPZ. Now, what didn't I say that was important? There's so much I didn't say. There are certain benefits that you have to add when you're computing your pay as you earn, and this is for businesses. Any non-cash benefit you give your employee that exceeds 3,000 in a month, please add it to their salary and tax it. Any non-cash benefit that you give to your employee, let's say, for example, my company has paid for me Wadidegla. as a club. That amount needs to be added in my salary, and I should be taxed on it. It's a benefit you've derived from your employment. Now, the mistake that the businesses here make is that as directors, you pull out quite a bit from your companies. You pull out. We can see you using the company cars for private business. Ndio umeenda mazishi, gari ni ya kampuni. You're not taxing yourself. 2% of the value of that motor vehicle should be taxed on you if that motor vehicle is a company's motor vehicle. So if KRA gives me a vehicle today worth 2 million, 2% of that is what? 40. I expect my pay slip every month to have a 40,000 loaded because it's a benefit. That's what the law provides. As long as you're using the company's motor vehicle, it doesn't matter. You're using the company's motor vehicle. If the company gives me airtime, we assume that 70% of that airtime is used for business. So 30% of that airtime, please add it to your pay slip and tax it at 30%. Now, there's a trick to that one. Please don't give your employees telephone allowances. There's a difference. If you give ESTHER 10,000 every month to buy airtime, who knows, I bought sugar with it, the 10,000. I didn't use the whole of it for airtime. So the entire 10,000 should be taxed. But if you went to Safaricom and loaded ESTHER's airtime with 10,000, only that 30% of 10,000 will be added. Do you get the difference? Because the government assumes you're only using 30% for private. But if you give ESTHER money, I can use it for anything. So the entire of it is taxed. Housing. If you're using a company's house, the company has decided to pay for you rent. Mnajua directors hapa wanajiripianga rent na pesa ya biashara. Si ndivyo mnafanya? Hata nyinyi. Si mnatoa pesa kwa kampuni mnalipa rent. Please iongeze kwa your emoluments, your rent. Utulipe 30%. It's a benefit. Unless you're taking it out as a loan. If you take it as a loan and you will refund it, then we will only compute it on the basis of how much interest should you have paid the company for borrowing its money. Are we clear? Please, separate your business from yourself. The business is yours. We know by the way. Tunajua hata labda bank account ni yako. We know the business is yours. But the moment you register a company, please separate the operations of the company from yourself for purposes of tax. We come to your bank accounts, by the way. That's the first thing we ask. So tukiona hizi drawings zinaenda kwa director. Is it a loan? If you can't justify you're paying back the loan and there is interest, yote tunai-tax at 30%. Because it's a benefit to you as a director. Davasha, wacha kutuatua pesa unatumia hapa kupeleka watu dinner. Hiyo pesa, please pay tax because it's a benefit to you. Now, there are certain benefits that are not taxable. Very few though, very few. If you give your employees meals, not exceeding 4,000 a month, you have a cafeteria. Remember, you have a cafeteria in the office, and you're paying meals for your employee in that cafeteria. As long as it doesn't exceed 4,000, hatuna shughuli na wewe. Per person. Wenye wanauza si ni wako biashara? Si hao tutawadeal na wao separate. Lakini hiyo ni biashara. Hao tunawatax separate. Kivyao, not you. They ought to have registered. So wakikuinvoice hapo pia unaangalia kama wameweka ETR, ndio. Okay? Now, when you travel, the law allows you up to 2,000 per night if you travel. The law allows that if you travel for business, najua nyinyi mna masafari mingi sana za Mombasa na kila kitu, 2,000, the government assumes it's reimbursement of your traveling cost. So hatutashughulika na wewe. But if it exceeds that, it is either taxable or you fully account for it as a cost for business. Meaning, ulete 2 receipts za hotel, ulete receipts za taxis. If you're able to account for the whole of it as a cost for business, don't tax that employee on that money. Are we clear? Now, if you pay medical insurance for your people, the government allows that, as long as it's a registered insurance company. Usiende kujifomia ka insurance yako na unajua hujaregister na IRA, Insurance Regulation Authority, ati unalipa medical insurance huko. If you pay medical insurance, we allow you that as a cost. Pension. It's also another allowable cost as long as it doesn't exceed 20,000 in a month. Now, I know I have exceeded my time. Let me highlight simplified taxation for small businesses. Having recognized that bookkeeping can be very difficult. Bookkeeping can be very difficult for some of us. The government came up with a simplified taxation for small businesses. And this is what we call turnover tax. So turnover tax regime is where a business makes between 1 million and 50 million. If you're in that threshold per year, you're allowed to just keep your invoices for sales, then you give us 1% of your total turnover. We have moved from where? Remember, you're a business, you're a PIPIN. We have moved from where? From 30% down to 1%. But what is the catch? Turnover, not profit. So if you feel, remember, this is a compulsory regime for anyone within 1 million and 50 million. It is what is expected by the government. But if you feel that your cost or your profitability will be lower, you are supposed to write to the commissioner and tell them you will not be in the turnover regime. You will move to the normal income tax regime. Are we clear? So when we come to audit you and your turnover is below 50 million, then we expect you to be in the turnover regime of 1%. Unless you show us evidence that you wrote to us and you told us you don't want to be in the turnover regime. So, the caveat here is that 50 million is above the 5 million for VAT I told you about. Remember, these are different taxes. They are different. So turnover tax is your income tax payment for your company, for the income. But then if your income is above 5 million, you still have to keep all your costs and invoices. Why? Because of VAT. Okay? Because of VAT. Remember, I told you the threshold to register for VAT is what? 5 million, right? So the moment you exceed 5 million, then you need to account for your output and input. So you cannot run away from invoices and documents. If you are below 5 million, it means you don't have a VAT obligation. So it means you can just keep your turnover records because we'll only tax you at 1%. Now, we are proposing to increase that to 3% in this finance bill. That is what it was before COVID. Don't be surprised. We moved it to 1% because of COVID. But we also want to lower that threshold to 15 million. so that you can only pay 1%. If you're between 500,000 and 15 million, you pay us 1%. If you exceed that, we rudi kwa 30%. It's a proposal. It's a proposal. Okay, so that's what we are proposing. So you go gunpoint kwa MP, mwambie atoe hiyo. And of course, 1% to 3%. Monthly rental income. You have some residential property somewhere. Si property umeweka tu saloon hapo chini na hardware, hiyo si residential. If you have residential property and your income is below 15 million or up to 15 million, then we allow you to pay what we call monthly rental income tax. Have I lost anyone? Monthly rental income tax on your gross rent at 10%. It's a simplified regime. 10%. Why 10% and the turnover tax is 1%? It is assumed that the return for rental houses and the return for a normal seller is different. That's why we do it at 10% higher. We are, however, proposing to reduce that to 7.5%. Sasa hiyo si ndio munge clap kidogo. Now, so this one you pay on a monthly basis. But if you feel, remember, if you feel that you have incurred a lot of costs that you need to claim against your rental property, you are allowed to tell the commissioner, I want to pay under the normal regime so that I take my income and deduct my cost. Now, this is where the rubber meets the road. What costs are you allowed to claim for rental buildings? Yeah? Maintenance, what else? Service charge. We have seen people claiming the cost of building. That is capex. Replacement of cabro ni capex. Pipes you can neither here. Some of these things you can argue with the commissioner is renovation is costs. You can argue it's cost because you incurred the original. Lakini usikuje kutuambia saa hii ndio una paint nyumba huku paint Mwanza unataka ikuwe renovation. We will not agree. Ama saa hii ndio unaweka kabro na unakuja kutuambia ni maintenance. Hakuna kitu kama hiyo. Maintenance ni ulieka kabro, moja imetoka, unarudisha. Are we clear? So tax is wide. I've just touched the surface. There are a lot of things that we can discuss in taxation. But if you live here with nothing else, please don't spare the cost of an accountant. If you can't, and if you are an accountant yourself, please keep proper records. We have no intention of harassing taxpayers. No intention. Hii gava imesema hata tuwaibie kawimbo mkilipa. Imesema hivyo. Tuwaibie nini? Kawimbo ndio mlipe. But if you have no records, even if you go to the commissioner, to the CG, to the board chair, hautasaidika. So please keep your records and be armed with tax knowledge on whatever it is that you need. Okay? People had questions, so I don't know if I have time to answer them. We'll start with his, and then there's someone I told to write. She's gone out. Okay, let's start with yours.
So what are the taxes that we should expect from our professionals, like lawyers, surveyors? I'm in the land and property business. Okay, what if the expenses are not receipted? For instance, when you pay cash flows on the site, what can be used as the evidence? Is it my payment confirmations or something like that? And final thing, charity work. Like when you donate something, is it taxable? Thank you.
Okay. So, okay.
Is tithe taxable?
Acha nianze na tithe. We don't like taxing churches. Let's start from there. Wewe kabla utithe, you've tithed after you've been taxed. Sawa? So usitoe tithe kwa business, my friend. Utoe tithe on your profit after tumei tax. Umeelewa? If tithe, you're tithing, I don't want to go into whether you tithe on gross or whatever, but I'm saying for a business, I would assume the tithe is on the profit you've made. And Pastor there, I am not a theologian. So it does not feature in your books as an expense. It is probably what you, I don't know if companies tithe, really. I would expect you, when you get your income from the company, as an individual, you are the one who is tithing. So that's how I want us to separate it. So it is not a cost in your business. It's you as an individual who is supposed to give 10% of your income. So your income isha taxiwa, sindio? Because if you are a shareholder, you've paid tax at 30%. Si tumebakisha, assuming you make a profit of 100, umelipa tax, umebakisha 70, sindio? Hii 70, you can decide to reuse it in the business, or you can pay yourself as a shareholder. Ukijilipa, pia tunangoa 5% withholding tax. So ukijilipa the entire 70, minus 5. So would expect then that's your income that you tithe. So tithe haikujangi kwa kampuni. So if you're giving the church money in your business, I would expect it maybe to be a donation because you're not restricted to giving a donation to the church. Now, that donation is allowed as a cost for you as a business if Pastor Dhuku here can give you the exemption certificate for the church. Tuko pamoja? So CITAM has an exemption certificate as a church, because the income of the church is mainly from tithes and donations that we expect to be taxed from the donor side. But the churches like CITAM wako na mashule na wanaweka hizi pesa kwa bank account, zina accumulate nini? Interest. If CITAM does not come to KRA to get an exemption, tutatax hizi school fees na interest and everything else that is not tithe and donation. So if the church is only having tithes and donations, hatuna shida na wewe. Lakini si utaweka hizi kwa bank? Si utapewa ka interest? Sasa sisi KRA tutakujia tax on the interest. But if you get an exemption certificate, that interest is not taxable because we have exempted that PIN from taxation. So the law allows for religious organizations, educational institutions, and other institutions that participate in alleviation of poverty and distress, like children's homes, you know those people, they can apply to KRA to get an exemption. So that then the donation they receive are allowed in the hands of the donor. So that ukidonatia children's home na wako na exemption, then I can claim that as a cost. And then when it goes to the hand of the organization, is also not taxed. So I've addressed that one. Sindio? Which kids? Unalipa na nini? Sasa hiyo haiko allowable. It depends if you're paying to an organization that is exempt. You understand? You're paying to an exempt organization. You're donating, like, what we recommend if you're giving this donation, donate it to the school to sponsor the child. So if the school has an exemption, then you're allowed that cost. Sawa sawa? We are together. Okay? Yes, I'll come to you. I've seen your hand.
Okay.
And I don't know how much time. We can be here the whole day on tax.
Okay, so I think
You're the ones who will regulate the questions I can answer.
Oh, Esther, thanks so much. So my name is Willie, and what I do is I handle taxes. So I just wanted to overemphasize on one thing that Esther said. This thing of ETIMS, the Revenue Authority has given a public notice. There's a hard close of 1st June. So from 1st June, what it means is any sale must go through ETIMS. Any purchase that you receive must pass through ETIMS. And what this means is you will not be able to claim any input tax unless it passed through ETIMS. So if you are invoiced by a vendor, you are supposed to ensure that that invoice, you scan the QR code to confirm that it has actually gone through ETIMS. So if it has not gone through ETIMS, what do? You can't pay that vendor. You need to insist, because if it fails to, and you paid the vendor, you'll not be able to utilize that input as your credit. Secondly, according to the proposal, what it means is that you are not going to enjoy any expense unless it passed through iTax. So you see, it's a burden to you to ensure that before you pay, everything has gone through iTax. So that's all I wanted to just emphasize.
Yeah, and actually we are introducing very serious penalties in this finance bill if you don't onboard. 1 million or 10 times the tax in a transaction. Please, nunueni ETIMS. There was an issue on professional services. I want to say quickly, that's your income. So if you're a corporation, you pay 30%. If you're an EPIN, you pay in the graduated scales. So it's income. What they deduct you deduct against your tax payable. What was your other question?
Okay. The question was, do they charge me VAT or I withhold the 5%?
It has both.
Okay, thank you.
So the person who is charging you management fees, it's VATable. As long as they are registered in VAT, they charge you VAT. When it comes to you, if you are not an appointed withholding agent, you pay them the entire amount. But if you are appointed as a withholding agent, utoe 2% tulipe kwanza, then you pay the other person. But that one is appointment by appointment. You should be appointed. But now for you, that income is taxed either as a corporation or as an EPIN. You had that question.
That one was cashless. How do you account for that?
Please, walipeni na M-Pesa. Wachaneni hii kitu ya cash. Please, just have a register for your casuals. Let them sign the amount you've paid them and pay them on M-Pesa. If you give us casual wages, we will ask you for evidence of payment. So we will print for us the M-Pesa statement corresponding to the register. Simple. Now I'm told we need to close. So maybe we can talk on the side for other questions, but there's a gentleman there. If you allow him to just quickly, then I won't
Good afternoon, everyone.
Afternoon.
It's still morning? Okay, the sun is out. Mine is actually a request that will benefit all of us, that you share that very enlightening presentation with the organizers that you share on email.
I don't have a presentation. I scribbled my notes.
What?
If you noticed, I was talking through. So I may not have a presentation, but if you go to the website, there are so many materials. Just Google basics of taxation. You'll get a lot of presentations by different people, by BDO, by Deloitte, there are quite a number of them. So you can be able to get that. But even KRA has an elaborate site where we put those materials.
Okay, I'm told to say this. The recording will be uploaded on YouTube, and when it is uploaded, we will share it in the CBF group so that you can be able to follow through slowly. Is that okay? Number 2?
With my permission.
With your permission, that is, yeah, through the permission of the speaker. And then the other comment was, if you can tell us when we have the free trainings, as you said earlier.
They are always posted on our Twitter handle, on our website. We actually engage taxpayers on very many things. So I think the best thing is to follow the Twitter handle. And sometimes we also charge for it. We have Kesra, but I don't think we are that expensive. The basics of taxation, we charge very little. But even people who are practicing also have very many sessions that they train people. ESTHER, for those who are accountants, they also have very many sessions where if you go to the internet, don't even go far. There are so many people who have written many things about taxation. The only thing is, make sure it is current, because our taxes keep changing, evolving over time. The moment you get the basics, keep following up on some of these finance bill, finance act. Maybe some of you don't know what is a finance bill, what is an act. A bill is a proposal. Until it goes to parliament and approved, it becomes a law. So right now, as church, you have a voice. You can go and tell your MPs not to pass. But the pressure for revenue, my friends, I'm not sure. What I didn't mention, though, is that VAT, and I needed to mention that, the reason why there is an outcry is because for petroleum products, for the longest time, we've taxed them at 8%. So we are shifting that to 16%. So if the bill passes, then of course you'll expect an increase. The reason why we've done that is because if you understand the input mechanism, you claim the input. So these petroleum companies claim input at 16%, but they only charge 8%. So they are perpetually in credits. You need to also understand the basis. They are perpetually in credits. They are claiming from KRA, which is what we are trying to deal with. Okay? Yeah. Thank you very much for listening.
I've cited a hand from Justice Kariuki.
Yeah. Sorry, I came late in asking the question, although I've listened to your presentation. The aspect I wanted just to comment on is because you are mentioning a lot of infraction of the law in terms of the people managing the taxes in their business vis-a-vis the KRA. I work in the judiciary as a judge of the High Court. And I come very much across the dispute arising between the business and the KRA. I think we would have mentioned in passing, especially the first port of call once they have dispute, because they always dispute what you are asking them. When they come, you close their business. You know, the first port of call, they come to us. They come, they run, they want an injunction to stop you from closing their business, or to at least to dispute to be determined by the court, but they're not supposed to do that.
Yeah.
You have internal mechanisms. So I advise them, before they are arrested and brought to us, or before their business are closed and come for injunctions, I think you have internal mechanisms which you can follow and save their money before they go to the lawyers. Thank you very much.
And that's very important. As I said, it's only that I can't go through everything in taxation. But what he has raised is very critical. So, evolution of a tax dispute. If we came to you today and raised a demand, the best thing to do is try and resolve it with KRA and settle what you agree with and agree with them on what is not payable, so that you pay and they close that chapter and we move on. If you are unable to agree with the KRA, it becomes an assessment. When they come first do the audit, what is expected is they need to give you first a right of response. So they give you a demand or like findings so that then you have a right of response to respond to them on why they have raised what they have raised. But if you're unable to agree, we go to the next level and we raise an assessment. An assessment is officially raised through KRA website, iTax. So we assess you. The moment you receive an assessment, you have been given 30 days by law to object to that assessment. That is formally writing to KRA and saying, I don't agree with your assessment for 1, 2, 3, 4 reasons. These are the documents. We request you to vacate the assessment. If your objection, we call it an objection to an assessment, which you're given 30 days. If you don't do it within 30 days, we can even attach your bank account. It is deemed that you have accepted the assessment. Our timelines, by the way, are very clear in the law. So when you object, the commissioner has been given 60 days to accept or reject your objection. If they reject, okay, let's start. If they accept, it means they are vacating or you're paying what it is that you have agreed you would pay. And at that stage, you still have room to negotiate with the commissioner until they issue an objection decision. Objection decision is saying, we agree or disagree with you, and therefore the taxes are payable. Within 60 days, if they don't give you a decision, it is deemed that they have accepted your objection. So don't allow the officers to come after 60 days to give you a decision. The law already prescribes, if the commissioner does not give you a decision within 60 days, you have accepted. If they give you an objection decision, the first step of appeal is the Tax Appeals Tribunal. So we have a court. It used to be quasi-judicial, meaning it was not under the judiciary, but now they have moved to the judicial system. But it is purely a tribunal that deals with tax matters. So the moment you receive an objection decision, you have 30 days to notify the commissioner that you're going to appeal that decision. Then you're given another 14 days to now file your appeal papers with the tribunal. Are we clear? So you go to the tribunal. So the reason why the judge has raised it is because when you receive an objection decision, we've seen people going to court. The law prescribes for a tax dispute, the first point of call is the Tax Appeals Tribunal. When you take it to the Tax Appeals Tribunal, the tribunal, of course, it's a normal court. Actually, the presiding chair is a qualified judge. So they preside over the dispute. So after that, if you don't agree, you can go to High Court, you can go to Court of Appeal, you can go to Supreme Court, if you are able to. Supreme Court is very restricted because it has, I think, to be constitutional matters and something like that. In the tribunal or in the court, High Court or Court of Appeal, our law allows you to engage the commissioner in what we call alternative dispute resolution, ADR. So I think in my profile you noted first I used to be in ADR. So I used to be a mediator, where you sit and you mediate resolution of a dispute between the taxpayer and the commissioner. So you can actually resolve your dispute out of court by going through ADR. Now ADR is still a framework within KRA. So we've sometimes been asked whether there is independence and fairness, but I can tell you for sure, having sat in as a mediator in resolution, at the end of the day, the decision is between yourself and the commissioner. We allow the taxpayer and the commissioner to sit and negotiate resolution of their dispute. So a mediator does not tell you settle this. You still have, the same way if you have a dispute and you want to settle it out of court, you sit with a mediator. The mediator does not dictate the terms of settlement. So you can actually resolve out of court, and the court allows you then to file a consent and withdraw the dispute. So we have resolved very many of those. Actually, it's not, we don't celebrate having disputes in court. Why? you tie revenue. You tie revenue in court. Some disputes go and judge can tell you here 10 years without being resolved. By the time I'm coming back to the taxpayer, they probably have sold all their assets. So it's in our interest to resolve the dispute at the earliest. That's why we encourage alternative dispute resolution. We have, however, proposed in the bill that before you appeal a tribunal decision, you pay us 20%. Thank you.